Hello and welcome to our webcast. I'm Amy Grass with Moss Adams, and I'm going to get us started for today's session, Investment Opportunities for Venture Capitalists in India and the U.S. Before we begin, I'm going to play a brief video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now that we have our housekeeping items out of the way, I would like to turn the floor over to Malachi Nugent to get us started.
Thank you, Amy. Hello, everyone. I'm Malachi Nugent, VP for Financial Services at the U.S.-India Strategic Partnership Forum. And on behalf of USISPF, I welcome you to this session today. Our topic is investment opportunities for VCs in India and the U.S., which is particularly relevant given all the turmoil and uncertainty in the global financial environment right now. We're coming off of 3 years of disruption from the pandemic and the related deep shocks to the global supply chain, huge demands that those things put on financial, fiscal, and monetary resources in countries in India and countries around the world. And then this year, adding to all of that, geopolitical shocks, the Russian invasion of Ukraine, spike in global energy and commodity prices, rising inflation generally, and rising interest rates to deal with all of that. So it's easy to understand a natural desire for retrenchment in face of all of those headwinds. But we also see a lot of opportunities in the US-India investment space. And India in particular has recovered well from the pandemic and continues to weather the challenges that the global economy is facing. India's rebounded from the deep contraction of 2020 and 2021, and is showing strong growth momentum in some of its high-frequency indicators. So we're seeing signs of accelerating aggregate demand in India, increased manufacturing and investment, and especially robust agricultural performance. I saw a statistic just this morning that said that aggregate rainfall surplus this year during the monsoon season was 7%, which bodes well both for food security and for food price moderation in India, which is, of course, very important. Inflation does remain a concern in India, and rising current account deficits, the weakness of the rupee, tightening monetary policy, all of these things remain concerns in India as they are concerns in countries around the world. But in India in particular, we see a certain base level of confidence. And that confidence remains strong both among investors and policymakers in India, foreign and domestic, in India and in the United States. And I hear that in my conversations with our members, a sense of sort of cautious optimism about the investment profile in India, and a gut feeling that there really are new opportunities out there. So that's going to be the basis of our conversation today. And to get us started, I want to recognize our hosts, Sheetal Sewal and Syed Rizvi, who are both partners at Moss Adams based in the San Francisco area. Sheetal and Syed both focus on tax, venture capital, private equity, and technology. So let me hand over to Syed to introduce formally today's discussion and our two esteemed panelists, Nishant Rao and Kanwal Rekhi. So Syed, over to you.
Thank you, Malachi. Excellent introduction. Definitely sets the table for our discussions today. So with that, my name is Syed. I'm a partner at Moss Adams, based out of the Bay Area. As Malachi mentioned, I oversee venture capital and private equity fund clients. And I'm like really excited to have a very distinguished panel today. I'll do a brief introduction, although the introduction is long, so I'll keep it brief. So I'll start with Kamal Rehi. Kamal is the managing director and co-founder in Ventus Capital. Kamal was the first Silicon Valley Indo-American founder and CEO to take a venture-backed company public on NASDAQ. In the 1990s, Kamal became a high-profile venture angel while co-founding and leading the Indus entrepreneurs group called TIE into the largest global mentoring network for Indian entrepreneurs in Silicon Valley and around the world. Welcome, Kamal. Joining Kamal is Nishant Rao, who is the founding partner of Avataar Venture. Nishant Rao brings expertise in B2B technology and SaaS sales and marketing with a repeat track record of delivering value and global scaling successful companies in consumer internet and enterprise software with multiple stints of growth past $100 million. Welcome, Nishant. Joining Nishant, as Malachi mentioned, we have Sheetal Sewal, who is a partner in Moss Adams. Sheetal has practiced public accounting since 1996. She has worked with startups and emerging growth companies in the area of mergers and acquisitions, income tax, multi-state international tax planning. Sheetal also has extensive experience in partnership tax issues, specializing in venture capital industry. Welcome, Sheetal.
Thank you.
And with that, we'll dive right into our first thematic topic, which is the U.S. and Indian macroeconomic environment. As there continues to be extreme volatility in the market, high inflation rate, we're excited to get a perspective of our speakers on the macro environment that we're dealing with first. With the Nishant, maybe I'll start with you first. Given that the U.S. current inflation rate is at a 4-decade high, and the interest rate expected to increase even higher in the U.S., can you provide your current short-term and midterm economic outlook for the U.S.?
Yeah, look, I think the U.S. has always been sort of the strongest market in most global conditions, and given the current crises across different parts of the world, including Europe, what's happening in China, lockdowns in Asia, etc., I still think that we'd be silly to be bearish on the U.S. We do obviously feel that the inflation has to cool off, and so the interest rate hikes are long overdue and much welcome. So I think long term, but if you look under the hood, when you think about gainful employment, when you think about deployment of venture capital, the U.S., it almost doesn't feel like there's a recession, even though technically from a numbers standpoint there is. So I think on the ground things seem to still be holding. There is there's a school of thought that 2023 gets worse when things really hit. But even in that environment, I don't see other markets, maybe outside of U.S. and India, being able to rise to the challenge and take sort of share away from the U.S.
Thank you, Nishant. Kamal, what is your same question to you? What is your short-term and medium-term outlook on the U.S.?
I agree with Nishant that it's foolish to short the U.S. market in any way. But there are some problems. U.S. immigration laws have been very atrocious. U.S. high-tech economy has been driven by immigrants, like people like me and Nishant. And visa seems to be a problem. So from that perspective, there is a limitation as to how fast the technology sector can grow. There's a manpower shortage there. Salaries are really going through the roof, and so there's an issue there. But long term, this is the hub of the activity. The best and the brightest still come here and find a way, to do their startups. So I don't see any dip in investment activity in the U.S. at all.
Interesting. Thanks, Kamal. Sheetal, what is your outlook? Same question. Just speaking with your clients.
Yeah, nothing different than what Nishant and Kamal said. Of course, what you read these days with most of the central banks across the world just ramping up their efforts to control inflation, you do get this gloomier outlook from economists, where they're predicting a global recession more than before. But I think just looking at the U.S., the hiring is at all-time high. Unemployment is very low, and corporate profits have been sturdy. Consumers are spending, and the hope is that the inflation will cool off. And so I think my thoughts are pretty much in line with what Nishant and Kanu said.
Thank you, Sheetal. Piggyback off of the same questions. Technically, you talk to economists, and they would say the U.S. market, U.S. economy is technically in a recession. But as we mentioned, the job market remains pretty strong. So that's definitely an interesting dynamic there. Kamal, maybe a question for you is how is the current state of the U.S. economy impacting opportunities in India? I know you briefly mentioned immigration as being a hot topic. And then secondly, what sectors in India you think are most impacted by the current state of the U.S. economy?
So by and large, India has been a very big beneficiary of immigration restrictions in the U.S. because people can immigrate to U.S., so they stay there and do their startups. Indian IT industry has reached almost $300 billion in size. Just to put that in perspective, that number was about $1 billion in year 2000. So there has been 300-fold increase in the size of the IT services export out of India in the last 22 years. And so India has become one of the largest pool of software people, and now the software product industry in India is starting to happen at a very, very rapid pace. People can immigrate to U.S. But these ties between U.S. and India are pretty tight. The markets are in the U.S. The talent is in India, and so people are becoming very innovative in ways of finding those two things match. And from manufacturing aside, there's this thought about China becoming a problem and the India becoming the manufacturing hub. It's very early stages. Apple is doing something, but services, I think India is doing really well. Manufacturing, we'll see.
Thank you, Kamal. Nishant, same question to you. The current state of the U.S. economy impacting opportunities in India and any particular sectors in your viewpoint most directly impacted?
Look, I think retail exports, from India obviously will be impacted in general. Like retail has been the sector that's probably retail and travel were the two sectors that were hit worst by the pandemic. I would say travel has bounced back well, even though there's capacity constraints. But retail has taken a little bit of a toll because there's been rolling lockdowns and stuff in different markets. So I would say retail, fashion, goods like export of textiles and stuff from India will still be probably a little bit muted because even buyers who want to, they're kind of hedging. But on the overall macro front, I think like Kamal was saying, we believe that it's a very exciting time for India because just like what happened after the 2000 dot-com bust, we went into a cost-constrained environment globally that really gave rise to the India services economy. And we think that exactly the same thing is going to happen, in this cost-constrained environment to give a boost or tailwind to the Indian SaaS industry, right? So Avataar, the fund that I created, was focused on just riding that wave, to capture that wave. So we do only B2B, only SaaS growth stage, and we're already seeing some of the benefits from that because Indian SaaS companies are building global products. So that's a huge opportunity we think there. The other thing, obviously, given the nature of what people wanting to dual source from China, is that it feels like the Make in India this time in this wave will actually take for two reasons, right? One, of course, there's the global desire to dual source. to a lot of the labor policy changes that have taken a longer time than we'd like to actually get done are actually done. So between that and the PLI incentives from the scheme, that's why you're seeing movement from Apple, Foxconn, etc., which I think is a really good, healthy thing for the Indian economy as a whole, because it's giving a dual engine. Right, IT services was always one piece, but now manufacturing with hardcore jobs on the ground will actually be really good for the country.
Thank you, Nishant. I like the positive outlook in the current environment. And so, Sheetal, same question to you. Your thoughts on what do you think the impact of the current economic state of the U.S. is on India and the sectors most impacted?
Just based on my experience, probably I won't speak to the sector specifically, but more about, how much startup funding would be impacted overall, basically the tech industry. As everybody knows, just based on the latest data from PitchBook and Silicon Valley Bank, capital raised worldwide this year in 2022 has declined quarter by quarter. And, so obviously the VC funding is softening a bit. And, despite this slump in the venture capital and the private equity rounds and, the high inflationary pressures, India did see a very good year in 2022 in terms of, the record number of India-focused venture funds and private equity funds and the amount of capital they raised. I think based on data by Silicon Valley Bank, the VC funds raised about 14.1 billion in capital to be deployed in startups, in India-focused VC funds, India-focused VC funds raised about 14.1 billion in capital to be deployed in startups in the first half of 2022, which was 3x the size compared to last year. So definitely, from a venture fund, investment perspective, it's been a good year so far. But I would expect, going forward, it would be a bit more muted, and with company valuations following, and obviously lower creation of unicorns in India, and just delayed IPOs. I would expect it to be muted, but so far it's been good, 2022 from a startup perspective.
Thank you, Sheetal. Speaking of valuation, that's our next topic. Looking at the public markets is just going through an emotional roller coaster these days, every morning. So, Kamal, maybe starting with you, just given the sluggish or volatile, whatever you want to name the current state of the public market, how do you think it's impacting, in your viewpoint, the valuation of private companies?
The old saying by Alan Greenspan comes to mind. The Indian markets have shown, irrational exuberance in valuations. The last year's, Paytm valuation of $20 billion. The company which has $300 million in revenue, $400 million in revenue, with no profits, no prospect of any profits, can be valued at those numbers. So I think the Indian market is due for corrections. Baidu, recently pulled off their IPO, because of this, same valuation issues. They were expecting massive valuations for a very puny revenue. So we have a way to go in India for corrections on the things similar to what happened in the US during the dot-com era. There was a massive correction of valuations. But by and large, Indian opportunity is very good. Software companies are becoming real, shipping products to American customers and making good revenue. But there has to be much more focus on profitability, not exclusively on growth. At least unit economics. In most cases, I see unit economics doesn't make sense. So we have these issues in India that need to go through a cycle.
Thank you, Kamal. Nishant, same question to you. What's your outlook on the asset valuation in the backdrop of the current volatile markets globally?
Yeah, look, I think overall, when you think about sort of India, if you actually chart the line from January 22 to now, right? September. So I was just presenting. I'm in Singapore right now. I was presenting a whole global set of investors. And when we pulled the data the day before, I think this was on Friday, India was the only market up 1.8%, whereas others were down like, between 15 and 30%, right? Across all the major economies of the world. And as Kaval says, it could be, irrational exuberance, but it was an interesting sign. So as we dug a little bit deeper to understand, what's happening there, it was interesting to see that where historically the Indian stock market as a whole has been sort of driven by FIIs, right, the foreign institutional investors. You're actually seeing in the latest, in the last year and into this year, that a bulk of that is actually being run by the domestic book. So there's about $4 billion of SIP kind of money, SIP money coming into the mutual funds on a monthly basis. So that's almost like 50 billion a year, right, if you think about it. And so that's taking a little bit of the pressure off the huge fluctuations we used to see as and when sort of FIIs decided to come in and out of the market. So that's sort of been, I think, overall a good trend. If you look at sort of overall corporate earnings, I think, the season is just about to start. So, but so far, corporate earnings actually in India have been good. I'm just talking, cross sectors, right, if you will. Mm-hmm. Coming to tech and SaaS, to what Kaul was saying, I feel slightly differently in the sense that, in general, I wouldn't call it an India phenomenon. In general, tech, valuations have gone a little too frothy in our mind, sort of, over the last almost 2 years, right? If we call it 18 months to 2 years. So it wasn't just an India phenomenon. But what we are seeing with, like actually RateGain, one of my companies was India's first ever SaaS IPO. You're starting to see that the Indian and the tech and the Asian investors are actually realizing how to value tech businesses a little differently. I'm 100% in agreement with Kaval that you cannot have a completely, cash guzzling business go and be valued at such ridiculous valuations. At the same time, what happened with, forget the irrational exuberance over the last couple of years, which was just global. But even before that, the US learned to value tech companies a little ahead of being like a 20% EBITDA business, because they're so early in their cycle, right? Cloud adoption right now is still about 15-16% of the global. There's so much growth to be left that you do want to value them a little ahead, in terms of revenue, maybe rather than EBITDA. What I am liking seeing is people are now starting to get more healthy around it, saying rule of 40, so it's growth plus EBITDA, and does that still make sense? So I think we're all for, measuring the right efficiency, but it doesn't necessarily need to be super profitable businesses to be valued, because people are realizing through the pandemic, especially a lot of conversations in India around how you need to invest in tech ahead of time. Because otherwise, by the time you invest in Google, after the party is played out, it's too late, right? So overall, I think it's not exuberance, but the valuation techniques and sort of balancing out to have more efficiency come in has been a welcome sort of development in the market.
That's interesting. Nishant, you just kind of staying on with you on this discussion topic. So it sounds like there might be a correction that might be due or might be already happening in the public, which correlates to the private valuation. Do you with all the dry powder that Sheetal just mentioned and the statistics being accumulated by the venture capital, and now this correction happening? So the million-dollar question: do you think as an investor, are we in a buyer's market?
Yeah, I definitely think so, right? I mean, and look, corrections have happened in India as they should have. My point was, tech corrections were a global correction required because the pendulum had shifted too far to the extreme. And I feel almost the pendulum has shifted a little bit past the mean already, like in the sense that there's some tech companies that I feel are actually undervalued right now. Take Freshworks, the company I formerly used to lead. They have $1 billion and a half in the bank. They're valued about $4 billion. So effectively a $3 billion valuation for almost a 500 million business. That feels less from a SaaS standpoint, right? If you think about it. Mm-hmm. So that's just one example, but we think that those will start to correct back up. If you look at the long-term average for SaaS stocks, it's between say 8 to 12x, with the average being around 9.5, right? So if you just chart the BBP index outside of the 2 crazy years that Kamal talked about, it's actually back into the same band. So that's a good sign, that good sign that is. But relative to that long-term average, there's still some tech stocks that are undervalued. So that's all I meant is, if you look at the B2C stocks in India, they're off 60, 70%. The policy bazaars of the world, the Nikas of the world, the Paytms, and as Kamal rightly pointed out, some of them should not have been valued the way they were at all to begin with.
Interesting. Kamal, same question to you. Speaking of valuations, do you believe we're in a buyer's market, or are we just normalizing?
Well, not quite a buyer's market yet, in my opinion. But there is an improvement from before, and there needs to be some more, in my opinion, before, especially retail buyers should rush in.
Thank you.
I'm somewhat old-fashioned. I have seen growth, without profitability leading to disaster. I was an investor in a company called Exodus back in the 90s. Exodus was the darling of the NASDAQ. They were valued $30 billion. They were doing $100 million in a monthly revenue. They were doubling year on year. And when the music stopped, in 2001, they went from 30 to 0 in less than 6 months.
Oh wow!
So I didn't start for life with that one. I saw that $30 billion valuation in mid-December and 0 valuation in mid-June.
Totally. I mean, those sort of house of cards for sure. There's plenty of those type of businesses also. So that's why the efficient balance, right? It's growth and profitability.
They were doing $100 million in monthly revenue, but they were losing tons of money. When the money, they were dependent upon the external financing for survival, and when the money became unavailable, they could not survive. The point I'm making is that I see Indian companies with their models right now, which are very unviable, and valuations are still out of whack. I mean, I am into one of those companies myself. I'm hoping that we can get out before the market drops, market cracks. But we are locked up till till November. The valuations are, they need to have some semblance to companies' current outlook and future outlook, right? If unit economics is not positive, no matter what size you are, you're going to scale up your losses.
Yeah, definitely interesting drop on those lessons, right, from the past. Sheetal, kind of closing the loop on this, talking to your clients, do you see a ramp up in purchase activity, or is it somewhat similar to prior at this point of where we are in Q3? Sheetal, I don't know if you're in mute, but okay, I think we'll get back to Sheetal on this question. Okay, moving on to our next discussion topic, and Kamal, maybe we'll stay with you, is opportunities right now in India, including SaaS. So within the economic backdrop we've been discussing, what is your current outlook on venture capitalists and their outlook on the Indian, startup market?
Yeah, this is a bright spot in the Indian industry. Lots of SaaS activity. By the way, this new model has emerged, with a Delaware incorporation with the India subsidiary, so you can take advantage of USISPF, laws and the Indian talent is happening. Indian government is fighting that one tooth and nail, but it's happening. I've done about 7 investments in last 12 years, where Delaware front end, all the people in India, a SaaS company, and it's happening in a bit. So I tell you, the talent is in India. There are close to 5 million software people in some, 20 suspect sometimes, and that number is increasing very rapidly. US, is not letting people in, and US number of, software people is limited. So this business, I think, is heading for India on a master.
Thank you, Kawal. Sheetal, I feel like you were having some mic issues, but I just kind of wanted to get your concluding thoughts on the prior topic on what are you seeing talking to your clients on the level of investing activities currently in Q3 compared to prior.
I wanted to actually add on to what Kanwal mentioned about the QSPS issues and the US investors are definitely more interested in investing in a US company, even though all the business is in India for that company. And the reason is that they get these qualified small business stock, which is a huge benefit, tax benefit in the US. So I would say, and most we see a lot of Indian companies do what we call the flip transaction, where they set up a US holdco, a holding company with all the business operations being in India, and which works in most cases, but there is of course there has to be a business reason behind it as well, because in the long run it plays out well if you're actually also looking to enter the US market, and it's just not to have a US holdco with none of your business operations being in the US. So it works very well for SaaS companies which are also looking to do business in the US in the future, or have an exit in the US, but definitely that's from a US investor's perspective, having a US entity where they could get the qualified small business stock tax benefit is pretty important.
Yeah. Can I add one more thing there? It's not just the US investor; it's the US customer also. He feels this thin veneer of delivery interpretation. It makes it look like a U.S. supplier to many U.S. customers. So it works on both fronts. Investors get the benefits, and customers are feel that they're buying from a U.S. company.
Sure.
Yeah, appreciate that commentary. Nishant, same question to you on opportunities for investors like yourself in the current economic backdrop in India.
Look, our fund Avataar was formed exactly to ride this wave. In 2018, I think we saw this wave coming, which is essentially a refresh. Think about it as a refresh. What's happening is, earlier there were sort of what we call horizontal product companies, which means the same product across different verticals. It could be a hospital, it could be a bank, it could be a bakery. Salesforce is the same CRM product, right? Or an SAP is the same HR tech product, and so on. And then you would kind of take an Infosys or a Deloitte or whatever and take that and say, okay, now customize it for my needs. And so that was wave one, right? If you think about it. And as Kawal pointed out, it's really proud to see India now a third of that, right? Almost $300 billion of revenue, by the way, not market cap. This is actual revenue coming from India. What we think is now happening, I've been noticing this, I've been a B2B SaaS guy my whole working life, is that, I think most enterprises, most companies as a whole has realized that why am I sitting and trying to build product? I'm not the best product guy, right? Obviously there's experts that do that. And so in trying to give directions to an Infosys or TCS or Deloitte to customize it, they actually lose. So now what you're seeing is enterprise software is getting verticalized. So RateGain, one of our companies, builds just for hotels and airlines. CRM Next builds just for banking and insurance. Capillary builds just for retail, etc. Right? And because these entrepreneurs have grown up in those industries, they've made sure all integrations. Let me give you an example of Zenoti. It makes spas for enterprise spas and salons. So take Tony and Guy has 800 locations, Hand and Stone has 1,200 locations. The needs are quite. But what does Zenoti do? It gives you everything in one. Your employee scheduling, your marketing, your loyalty management, your payments, all of that stuff is taken care in one product. And so, now the spa owner or the chain owner, it doesn't have to go and stitch together 10 products and hope to give sort of, Deloitte the right sort of advice, right, or requirements. And so as that happens, we think that there's a big wave of, global SaaS, what we call global SaaS 2.0, which will actually emerge out of India. It's still a global play. You're going to compete against the US sort of Silicon Valley product companies. And we think win, because we think that what we're seeing across, several of our portfolio companies is the product that gets built in India and broadly Asia is much more hardened They may not pay you much, but if you're working with HDFC Bank, you can be sure they'll give you all the features that you need to do to really hard test out your product. So by the time we actually bring those products to the US, say for example in expanding, it's actually a premium priced product because all the functionality is there. Whereas Silicon Valley tends to be a little bit MVP and up approach, right? So that's a huge opportunity we think, is the global SaaS opportunity. There's another opportunity I'd like to talk, which is more India specific, right? Because, India and Asia as a whole has never really paid for software. What we're seeing now is 2-3 things, right? One, the models are changing. So instead of charging you subscription, because technology has just gone crazy. 62% of India now has high quality internet penetration, cheapest data in the world. And of that, actually, if you look at PLD numbers, the fastest growing segment is actually rural India. So now that opens up a massive set of opportunities for rural set of India, tier 3, tier 4 markets, which have historically never been there. And so, we see a huge opportunity, whether you think about insurance, India is about, 1/5 the level of coverage that it should be compared to other developed economies. Whether you think about things like FMCG goods and choices, right? The opportunity to serve FMCG goods like, your toothpaste and so on into rural India is it's 300 billion going to 600 billion compared to all of e-commerce in the, metro cities of India being about 30 to 50 billion. So it's order of magnitude different markets, and we see that those markets opening up. It's about 250 million farmers in India that have been farming the same way for the last 60 years. Now with the adoption of technology, you can actually be much, much more smarter. And what we're seeing is the models are a little different. If I'm able to use technology and help make you efficient, I'll take a little take rate of the additional gain that I do. So it's not a software type license. So we think those models, in the form of marketplaces and transaction platforms are also very, very interesting opportunities in India today.
Yeah, that's very interesting. Nishant, just kind of piggybacking off the same thought process, some of the headliner numbers that makes the news, talking about SaaS companies in India now, some of the statistics I found was they're expected to raise about $6.5 billion US dollars in 2022, and there's expectation they're going to be between 8 to 12 unicorns emerging just in 2022. So just sticking with SaaS for now, it seems like you're quite bullish on the opportunities there. Do you think the growth trajectory will continue in SaaS, or is it expected to slow down at some point?
No, it will actually. Of the 20 unicorns that are created in India in 2022, 14 were B2B SaaS, right? I mean, B2B or SaaS companies. So where earlier India and Asia used to be very B2C markets, suddenly people are realizing, hey, much better to Kamal's point, much more profitable models. You can actually exit these businesses and they're sort of, easier to do rather than sort of burn your way through. So we're definitely seeing that continue. And in fact, if you think about growth deals, like, you have 2-3 things you need in a market, right? You need obviously all the talent and all those pieces. You need enough funding. So, like you said, SaaS funding has 5x and we see no signs of it slowing down. So, that'll continue. You also need repeat founders. There's about 1,200 repeat SaaS founders in India. You need sort of an ecosystem. I think Kamal was talking about the 5 million engineers, but what the audience we're talking to may not know is now there's about 300,000 inside sales folks out of India. Form of colleagues of mine at Freshworks, at Akamai, at Zoho, etc., calling from India, in nighttime India time for the US or for Australia. There's about 250,000 UI UX developers growing at 15% CAGR every year, right? So content marketing, all the pieces you need to build global product are actually now hitting critical mass in India. They have the best internet penetration, so they're playing with all the global apps, whether it's Instagram, Facebook on the social side, whether it's LinkedIn or Monday.com or Evernote or whatever. So they know what great product looks like. And so now you're seeing the next set of products that we created. You can't tell. I mean, maybe if you go to the incorporation certificate to share Delaware, you can't tell whether it's an Indian or a US company. And so, that's kind of what's happening. So we think in SMB opportunity is huge from India, SMB SaaS, because we have a cost advantage and we have a service advantage. When our guys call, they're not pushy salespeople like in the US, but that's actually helpful for a small SMB business. And then the enterprise I talked about, that's a very different game. That actually we feel is going to grow from India to the world. I think what we're noticing, we have some of the largest SaaS companies in India in our portfolio today, is that the flips that Sheetal was mentioning are definitely becoming super hard. the government sort of, the SEBI, is not necessarily giving those approvals. So if you start, which, new set of companies that are starting today or the last couple of years have started off as Delaware entities. But we think that regulation is going to get harder and harder. But in a way, it's not a bad thing because we are seeing Indian IPO markets also open up in terms of liquidity, in terms of a little bit more sophisticated tech investors. So you can always, like the IT services companies, do an IPO and then do an ADR in the US.
Interesting. Thanks, Nishant. Kamal, same question on SaaS, the exponential growth and then the unicorns coming out of that. What is your viewpoint?
I am super bullish on that one. I see $1 trillion software industry out of India. So let me give you another way of thinking. U.S. set of customers have become very comfortable, using Indian talent in the for IT services. This talent has been trained in the needs of the U.S. customers and their and the broad U.S. market. So they are very much on top of what market needs, and they are up to snuff on technology front, and there's a level of comfort in the customers. Indians do deliver good stuff. So all that is coming together, and the venture money is coming to India in large numbers. Talent is there, and all these other ancillary activities are happening. The sales and all that. So this bodes very, very well. The only fly in the ointment in my eye is the government of India. They don't understand. They don't understand this opportunity, and they need to just step aside and let it happen. But besides that, I think everything is starting to line up for India, and I see $1 trillion industry in not too distant a future.
Wow.
So just to put it in perspective, Syed, what Kamal just said, India right now accounts for about less than 1.5% of the global share on cloud software. Mm-hmm. Even if you just 10x that, that's $1 trillion enterprise value creation opportunity. So if you believe it'll go higher, like get to the 30% that we're seeing in services, now that's $2 trillion. So these are very small numbers. Movement is going to have a big impact on the economy.
Wow. Thank you, Nishant and Kamal. It's kind of SaaS has been around for a while in India. Has been, I would say, somewhat a mature space. I just want to switch gears to talk about disruptive technologies. Some statistics on disruption. Talking about the digital economy, blockchain, fintech. Fintech's been obviously doing really well. That was one of our discussion points in the last panel. So by some project management institute survey, 3 of the top disruptive technology that they identified were cloud solutions, Internet of Things, and AI. So just speaking of disruption, and maybe Nishant, kind of get your viewpoint, just looking at over the next 5 to 10 years, what do you think would be the next big disruptor in India?
I mean, you've taken away cloud, you've taken away AI, you've taken away IoT. That's not fair. But I think No, I think those are changing everything, right? Like every industry, if you think about it, from retail to travel and transportation, we're seeing sort of AI-enabled solutions, really coming to the bear. And historically, India has always, I mean, not India, broadly, I would say even the US to some extent, people, use the word AI, but it's really like machine learning, right? ML, which is just like coded rules. But now you're starting to see true deep neural network type AI kind of come into play and be used. And so, where it might disrupt, we think the most is like agriculture. For example, I was just reading an article last week talking about how I hadn't even, as an Indian living there, hadn't realized that almost 55% or something of India's land is arable. Itself, just the country can be the food bowl for the world, right? If we kind of, get to more efficient practices on agriculture. And so you can think about sort of just the massive opportunity that's there. Because like I was saying, these 250 million farmers have planted the same crop for the same thing for the last 60 years. But now, you can test soil, see what nutrients are there, change the crop rotation, based on the weather conditions, kind of give alerts to farmers. There's a lot of now we're starting to see a lot of agri-tech startups kind of coming up. So that's just one additional example of disruption that we think is happening. But I'll defer to the other panelists to give some more examples.
Yeah, thank you, Nishant. Kamal, your viewpoint on disruption.
If we start at a macro level, India is a very inefficient society. Per capita income is 1/30th of the U.S. It's not that the U.S. Voters work harder or smarter. It's application of technology and tools which has improved the productivity in the U.S. And that's starting to happen in India. India seems to be leapfrogging on the digital front in many ways, and unlike China, which had to go through a linear process of growth, very rapid, building factories, building supply chains is it's a linear process. But using the application of technology, like Nishant is talking about, in the sectors which have been so inefficient for so long, could really provide a non-linear growth, in my opinion. And so I see, it's always back to my one, caveat about the government of India, which doesn't see this non-linearity as a natural thing. It is some hanky-panky going on when West had created. There was a news yesterday that government of India is looking into these angel funds to see why, if there's a black money going through, angel investments into the companies. Leave it be is my perspective on that one. But I see a massive disruption taking place in Indian farm economy, rural economy, and with the application of technology. Entrepreneurs, I run into entrepreneurs all the time now who are doing things which come as a big surprise, but they shouldn't. India is not going to become large farms, mechanized like the rest of the world. It's going to stay, but it is apply technology and make the smaller farms more productive by using more modern techniques. And I think that's where the technology and entrepreneurs are going to play, and VCs are going to play a very big role. Mm-hmm. India is not going to evolve. India is going to metamorphose one day, hopefully.
Yeah, there's a really good social aspect to that, story too on the farming side. So it's really good to see that. Kamal, staying with you, I know you briefly in the beginning had talked about exits, and as we were talking about valuation. So just kind of going back to that topic, what is your, in the backdrop again of the current public markets, your expectation on exit for entrepreneurs and your investors like yourself?
So let's have a little bit of history. If I may, 1998, we held a conference in Delhi, led by TAI in Silicon Valley, was titled Entrepreneurship and Wealth Creation, Silicon Valley Style. That was the first time anybody ever talked about entrepreneurship, wealth creation in India. 500 people attended that conference in 1998. And out of that one came, the laws like FBCA and a few other things, which made the things happen. Move forward a little bit, the Mauritius route became available. Mauritius route was there in 80s, but became visible and promoted by the people in 90s. And you could come to India. So the reason I bring this to you is when Arun Jaitley became the finance minister in 2014. Was that 2000? When this current government came, Arun was a friend. I knew him from 90s. I went to see him. I said, Arun, why are you forcing me to come to India through Mauritius? Why can't I come to the front door and get the same benefits that I get from coming to Mauritius? Our fund was based in Mauritius. Why are you asking me to spend money in Mauritius? And by the way, the Indian stock market had zero capital gain, if there was a transaction done on the stock market, and massive capital gains on the private enterprises. So I asked him, stock market speculation tax-free. productive investment in startups. Yeah, that is something wrong with this picture. And he said, yeah, he told me, yeah, wait for a few weeks. My friend will fix it. So he fixed it by shutting the Mauritius route and putting the taxes on the stock market transactions. So there's a lack of fundamental clarity, and what you're seeing in these markets are this confusion. What is happening right now is there's this belief that the Indian government is, by the way, very focused on unicorns as a test, as a measure of success, rather than as a profitability and growth with profitability. So I see all this stuff in India happening in somewhat confused fashion. There needs to be some clarity, some leadership, some involvement at the top. India is in process of transformation based with technology and entrepreneurship and wealth creation, and this process needs to be sort of encouraged and managed in a positive fashion, and rather than looked upon as a suspicious activity. The government of India is still very focused on taxation as its primary goal, rather than growth and job creation as primary goal. So I see stock market is somewhat decoupled from what is happening, but the reality on the ground is very, very positive. And India being a democracy, I think the voters will ultimately force the hand of the government. But the current government, even though it professes to be very, very pro-business, pro-startup, pro-everything, doesn't have the things under control.
Thanks for that historical context. Well, Nishant, switching gears back to you again on opportunities of for entrepreneurs who might be working hard and might be looking at this current volatility and just like, I don't know, there might be confusion, as Kamal said. What is it that you're telling them, and what's your outlook on the exits?
Look, I think the short answer, anytime you're thinking about exits, is you have to be sort of just disciplined and diligent, right? I think that goes for both entrepreneurs and investors. You can't be building based on, how I can't predict what's going to happen when, say, we exit our companies in 7 years' time. So you got to just stay diligent, focus on the right economics and right metrics for your business. And God willing, in some market, you might, end up exiting in a 2021 like crazy market and make a little extra, maybe 15, 20, 30% extra. But that's a bonus, right? That you don't necessarily count for. So I think we got to just keep building the companies, as board members and as entrepreneurs, as we would to the best of our ability, and depending on sort of the exit time horizons, be disciplined in also taking and banking money at the right time. I will say that from an India standpoint, historically, when you think about maybe from the U.S. investor angle, the two big I would say bottlenecks or concerns people talk about when they come to India is, one, the liquidity or the volume of exits, and two, the currency risk, right? And so it's been good to see that, outside of just the run up in unicorns, like Kaul said, that's kind of a vanity metric, which doesn't really count. But, the average exits before 2015, 2016 were a couple $100 million a year, then peaked out at about 1.5. But in 21, there was almost $15 billion of exits, so almost like a 10x, right? So it's possible that it's proven that that India can exit once you start maturing those ecosystems. We have to, as investors, keep continuing to focus on that. The other good part is as you see more and more share of B2B global businesses being built out of India, that automatically naturally provides you a hedge against the currency. So I do think that currency will continue to depreciate. It's always in that 10 to 20% type band. So we don't see, that changing. It has held up kind of, much better, I would say, than most other, if you see, Euro versus USD or now even pound versus USD, India has held up, the rupee has held up much better. But you should count on, some degree of depreciation. But at the same time, there is an exit environment. What people may not know is about 1,200 M&A exits have happened, and M&A transactions. So forget IPO; these are just secondary sales. Over the past 3-4 years, there have been about 1,200 M&As. That is unheard of from an India standpoint when you think about the 90s or the 2000s even, right? So it's a sign of, aging of the ecosystem. Last year, I think in 21, there was about 35 ESOP buyback programs in India. Again, showing confidence that entrepreneurs are showing, hey, I'm on a buyback because I believe in my company. So, these are good signs of the maturing of the Indian startup ecosystem. And I think, we're kind of at a place where we have to continue to build and grow. We can't be complacent, but it has some really strong foundations under us.
Thank you, Nishant. Just kind of going back to the basics, I like that, focusing on your business first and then the markets and the timing. Sheetal, just quickly getting your viewpoint, talking to your clients about exits. Do you see an uptick or maybe not an uptick in this environment? Sheetal, I think
I was muted. Last year I work with a lot of India-focused venture funds, and I think across the board last year we saw a lot of exits in a lot of my clients, and I expect that going forward it will be just based on how things are at this point. The exits will be a little bit more muted, but the one thing that I wanted to actually it's a challenge, and obviously from a tax perspective, I kind of wanted to, Kanwal touched upon it, is the Mauritius route and the investments flowing in through Mauritius. And this has kind of becomes one of the challenge for U.S. investors is the India-Mauritius treaty was very beneficial for U.S. investors because, the capital gains were not taxed under the treaty. And now with that treaty, being renegotiated, and it's been a couple of years now, capital gains in India are subject to taxes for the U.S. investors. I think it's 10% for long-term capital gains, and often that it becomes a challenge being able to get. It ends up being double tax. It's just the way the law works, the U.S. law works. I mean, you could look to the treaty between the U.S. and India, but in most cases, it ends up being double tax. So that's become a little bit of more of a cost of doing business, or it reduces your return of capital for U.S. investors if you have this 10% tax, which oftentimes they may not be able to credit that easily. It depends upon a lot. It depends a lot on facts and circumstances. So it is a little bit of a challenge now compared to what it used to be. I mean, India with you didn't have to, a few years ago, you didn't have to worry about withholding taxes in India at all for the U.S. investors.
It's always interesting to bring that tax perspective. I mean, there's more to the equation. I think we're approaching top of the hour. This was an excellent discussion. So I really want to thank Kamal, Nishant, and obviously Sheetal. Thank you for your time. Hopefully our audience found this discussion insightful. So appreciate your time today, and we look forward to hearing more from you guys in future. So thank you so much.
Good.
Thank you.
Thanks for a great session. Yeah.
Thank you.
Bye. With that, Amy, I will turn it over back to you and for some concluding remarks.
All right, thank you. And yes, we are out of time, but thank you to all the presenters for a really great discussion today. And to our audience, feel free to reach out to any of the contacts listed on this slide if you need more information. You can download the slides from the handouts window in your console if you would like to have that contact information on hand. And then we also have the Alternative Investments Conference coming up in December, so be on the lookout for more information on that. This is a 2-day virtual conference, and we will address important strategies to help you stay ahead of upcoming accounting, regulatory, and tax changes, as well as key trends and industry opportunities. And then we also have several resources available on our website, which should be linked in the PDF you download from your console as well. And then finally, here is a link to an online survey for today's presentation. And thank you for joining us. Take care, everyone.
Thanks, Amy.
Thank you.